Welcome to Real Stories in Real Estate with your host, Denise Laframboise. Real people sharing real stories about their adventures in real estate.
Welcome to Real Stories in Real Estate. I'm your host, Denise Laframboise, and this is a podcast where we talk to real people about things that they've done in real estate, where they share about their experience, the good, the bad, and if they would do it again. So today, my guest is Uchechi. Welcome.
Thank you for having me.
And we're going to talk today about how you got your first home.
Yeah, for me, it's funny enough. The first time I bought my first home, I was about 23, 24 years old. I was like out of university. But it was interesting. Like it was a rent to own that they had. And it was actually through a builder, Daniel's Corporation. For me, it was amazing because right out of university, I had a really great paying job, like more than what most people had coming out of university. But I also had student loan and I didn't have a chunk of change waiting for me to do a deposit. And also for me, when I was done university, I didn't like the concept of renting only because I just felt that I was giving money away. So literally I was in a subway and I saw a sign that was like rent to own. And then we went in there and I went with my sisters because they also bought condos in the same building. And so they had a program where you rented for a year, and after the year, if you chose to close after the year, they took half of your rent towards your down payment. And so when I did the calculation, that came up to, I want to say, if my memory serves me right, something about like 80% or so of the down payment. So I'm like, wow, that's great. And then, I had a year to save up the other half. And so with that contract, you had a year. And I believe if you chose to close in 2 years, so if you needed more time, I feel like it was about 25% of your rent that they then took towards your down payment. So of course, if you close quicker in the year, they took half. So it was a great opportunity because I'm like, I didn't have any change there, but I had great salary because I could have covered it. And of course, we had to qualify for it. Yeah, and then we went into it, and that was how it was a new building, and it was a condo in Bayview Village, and like the best investment that I think I've ever did.
Right.
Yeah.
And so rental owns are something that we see pop up here and there. Sometimes they're from a builder, like Daniel's a pretty common one that has been doing it for years with different buildings that they build. Sometimes they're private arrangements, either through family or through like a private company as well. But it's exactly what you said. It's for helping somebody get into a home that is missing a piece. So sometimes it's that they need 2 years to rebuild credit. Right. So they have a down payment, but they don't qualify for the mortgage. Or sometimes it's that they don't have the down payment, but they have a good job. Right.
Mhm.
Like they're missing that one piece and they need a couple years to get to it. But it's an arrangement where you can rent and essentially prepay some of that deposit amount so that you are able to get into a home a little faster or at least guarantee yourself a home.
Yeah.
Some of the pitfalls of them, depending on the arrangement, is more things like how do you get out of it or how do you commit to it, right? So if you signed up for it and then 2 years from now you still don't qualify, what happens? Do you get
Yeah.
some of that money back? Does the builder keep all of it? What happens at that point? We've also seen some other more ugly ones where it's like, 2 years from now, if that property's gone way up in value, which I mean, yours in Toronto did, right?
Yeah, it
Um,
was huge.
yeah, that some of those contracts will say that the owner can sell it to somebody else at a
Mm.
larger profit, right? So it's really like the contracts are not all made the same. I would suggest the Daniels one is always, anytime we've seen it, it's looked really good. But some of the private ones can be kind of, you just have to make sure that all of those items are addressed, right?
Yeah. Yeah. And I mean, and what I liked about Daniels, it was really transparent because they were very open in a sense of, okay, you have the year, it's half after the year. Like I said, I think it's 25%. And I believe, and I can't quote on this, but I'm pretty sure that it was where after the 2 years, if you can't for whatever reason, then they would take that back because they're not renters, and then they would sell it. And what I loved about that from my perspective is where going into it, like you're the same thing, there was a piece missing. I had the
The
salary,
income.
the
Yeah.
income for it, but I didn't have any down payment. And even for me, even if I was renting somewhere, to think to myself, okay, let me save up X amounts, right? I would never have done that. Like the discipline to do that, even well-meaning, even though like it probably would have taken me 5 years after that, but it was almost like a forced saving because I have to pay that rent anyways. I was living there. And
Yeah.
so that was where, oh my, that it was almost like it was like a forced saving to save that 80% or so, whatever it was, or I think it was 75%, but then the rest was easy enough for me to do in that year with the salary that I have. So
And do you remember like what the difference might have been to do, like to sign up to pay this monthly amount to Daniels versus what it would have cost you to rent in the same area?
in the area, like I would probably say maybe $300 less, right? If I was buying in the same, because it was like a one bedroom and a den, and in a beautiful building, and it was right across Bayview Village, which is like such a great area right now, and it was back then. Although the subway station wasn't built yet, so once that was built, about 6 months after I moved in, the property went higher. But in that particular area, for that same thing, at the very most, probably $500 less, it may have cost me to be a renter there. So, at the end of the day, that was something that was going towards creating something that I can own myself and start to build my equity. And even for the ones where in 2 years, they leave. But here's the thing, they were paying, like you had a place to stay for 2 years,
Yeah.
right? So it's almost like you paying, it's not like you have to pay back additional money. Like you had 2 years to live there, right? So
Yeah,
it's
if you were
like you
gonna
paying
rent anywhere, might
anyway.
as well
Yeah,
take the chance that you possibly
could,
could
yeah.
could gain some of that money back.
Yeah, exactly.
Smart.
You
Awesome. So, any negatives about it?
know what? From my perspective, it really wasn't. I mean, here's the thing. I have heard since, I've done it, I have heard some horror stories about rent to owns, right? Which surprised me because I was like, oh my God, I had such a great experience and everything was transparent. But like you said, I mean, I never heard the other side. I thought every rent to own operated the same way because I mean, there was actually a Facebook, somebody asked about that. And I was like, oh yeah, it was great. But then I think myself and my sister was the only comment, probably out of 80 or so, that was
Wow.
positive. The rest were just saying about how people took advantage and all these different gray areas. And there was also rent to own by private owners, which I guess different complexities. But I was shocked at some of the, just the feedback and just some of the stories of people who went to rent to own, and some of them had to pay certain things back, which to me didn't make any sense because you've been paying money, like it's a rent to own. So, and then I also have heard, not from my experience, but there was a friend of ours who they were renting from a home, it's a house, but they were under understanding, and I don't know if there was a contract or not. I doubt there was a contract because I think if there was, there could have been ways for them to go forward with it. But they were renting a home on the understanding that they're going to be the ones that were able to buy it, and some ports, as even it was a small portion of it, will go to them buying it. Unfortunately, that owner gave them the notice that they're selling it. They weren't giving them the option to sell it, and it was none of their rent at all was going into it. So
Yeah.
I don't know if they did or did not have a contract, but they were the understanding that this is the home, and they were fixing it. They did all these renovations to the home, and they did it because they thought that this was going to be their home down the road, so they didn't mind doing it. So that was,
Yeah,
yeah.
and that's where like especially with the private ones, like every contract can be different. It's really about making sure that everything that's in the contract needs to be in there. I mean, that's why we have lawyers. That's why you pay them to go through that with you and make sure that the pros and cons are all covered. And what happens, right? I mean, you also see somewhere you've committed to renting to own, and you're going to buy this house in a few years. What if you don't qualify, right? What
Yeah, that
happens?
time.
If it's a big builder that can sell to somebody else, it's probably not as detrimental as possibly to the owner that had this plan in place. And so it really is just about reviewing those contracts really clear. So I think it's obvious, but would you do it again?
Oh my God, absolutely. Honestly, I said, it was one of the, it's funny because when I was out of university, it was a choice between launching my wellness center, which we did, or buying a home. And actually, my sisters and I, we decided, we're like, let's just buy homes just to have something. And I'm so glad we did because, you know, once we did, we actually had that foundation for when we opened up our wellness center. We had, as some entrepreneurs, there's certain times that there was some struggle, and not like you, I recommend doing this, but you know what? We were able to pull equity because we had great equity in our home to help our business, right? And then it helped us to fund our business to really help it get to another level. And we were lucky too, because I had two sisters and we all bought condos in the same building. So there was like three of us with three properties there. So one of my sisters was my business partner. So we felt like we had two things, right? And we worked really closely together. But it was one of the best things, because I think for me, had I not taken that opportunity, it would have taken me so much longer to get into the real estate game. And particularly in the area that I bought in, if it would have been 3 years, that like the price that I would have paid would have been probably out of reach, because the subway was built, everything was being fully developed, and I probably would have had a struggle buying in that at that time, right? So I mean, that's one of the reasons we moved to Durham, right? Because I got pregnant and we're like, okay, let's buy a house, and it's like, ooh, what do you mean $1 million for a 1,000 square feet
Yeah.
stacked townhome, right? It's yeah.
Do you remember what you bought for and how long you had it and what you sold it for?
Oh my God, I remember realizing that when I sold the condo, I don't remember what I bought it for, but I remember thinking when I sold the condo, which was, it was I want to say just under 600 square feet. So it was like a 1 bedroom and a den. But the price that I sold it for, my like 2,400, 4 bedroom home, was only $70,000 more.
It's crazy, right?
I was like, what are you, like, it was insane.
And
Like,
that's the argument for buy in the best location, right? You
yeah,
make your money when you buy. You don't make your money when you sell. You
yeah,
make your money when you buy in a location that is marketable, that is going to increase in value,
yeah,
and that's going to hold its value.
yeah, because it really did. It skyrocketed. And I couldn't believe, like, I'm just like that. Like, when I sold it, yeah, it was literally 70, like the little condo
Yeah.
was like this house was only $70,000 more than
But
a
farther out
small
of the
condo.
city,
Exactly, yeah, right. So it was like, and that's the thing. And
right?
obviously we all
No,
know
no
Durham.
Mark McEwen restaurant right outside your door. Like, it's a little
Seriously.
different,
Yeah,
right?
but I mean, I guess now even our market is getting higher, like ridiculous now,
Yeah.
right? So
But you
hopefully,
bought here before the 407 was built, right? Like that was
ex-
like your
oh,
subway out
but
here,
even
right?
now, but I feel like, and this, being in this industry, it's all about the timing, right? Because even now, what we bought, now we're laughing because what we bought this house at, like 2 years later, it doubled. So I
Yeah.
always feel like I'm lucky, that I've always gone in where it was a great opportunity, because now Durham wasn't as crazy, but because the house, like 2 years later, the value was doubled
Yeah.
what we actually paid in this house that we're in right now. So yeah, I guess it's always about timing, but you never know, right? Because like, they always say you can't predict the market. I don't know what that saying is, but
Well, you can't time the market for
yeah,
sure,
time the
but
market.
if
Yeah.
you buy in the right place and you plan to hold over time, it's
Yeah.
always going to go up in value.
Yeah.
Unless you're buying in an area where like they're going to have a huge economic detriment, right?
Mm.
If you're buying in a town where there's only one factory and everybody works there and the factory shuts down, that's different than buying in the GTA where your proximity to downtown matters,
Yeah.
even in a pandemic, right?
Yeah.
Also, you have a business. You want to talk a little bit about your business?
Yeah, so I have a business, My Empowered Living in Basarique. So I'm a business and lifestyle strategist. And one of the things that I do is really help, my purposeful driven entrepreneurs find ways to really skyrocket their sales, make more of an impact, because that's my biggest thing. The more entrepreneurs have more economic wealth, they can make a better impact. And I do this I have some private coaching, but I do more of my membership that I do with my clients, where they come in and they have different tactical training and coaching support within the group and within the community. And I also have my publishing side, where I help authors, aspiring authors, become published, whether it's through my co-authoring book projects or any solo projects that they may have. And of course, I have my Dream Life Designer Planners, which is a goal setting and planner system in one, which is something that I use, where I use the same systems that I use with my coaching clients, package it into a planner system to really help people get the results that they want, both in their business and in their life.
I love your planners. I've been using them for years. I love them. Everybody needs one all the time. And I like that it's still paper. Like I can do almost everything digital, but I need to handwrite goals. I need
That's
to
me.
handwrite to do
I
things.
need to
Like,
cross things out. Like
yeah.
there's something for
Oh
me, and
yeah.
also mapping things out on paper and seeing where things go.
And a list. Like I just love a list.
Yeah. Yeah.
There's like an episode of I think it was Modern Family, where they were like, because Phil was picking up his wife in the bar, and he's like, "Oh, my wife can write lists all day long." I
Love
was like,
it.
"That's me."
You're like,
Wow.
"That's me."
I really appreciate you sharing your story with me today. It's really good to hear a positive story about getting into the market as a young person with relatively like good income, but no down payment really saved.
Yeah.
And I think there's a lot of young people who could benefit from those types of agreements. And it really is just like looking at the details, right? Because they're not all created equal, but there are some great ones. And I appreciate you sharing a story about a good one.
Thank
So thank you so much for being here. Everybody, we're talking to Yuchechi today, and she was sharing about rent to own from a builder when she purchased in Toronto. So I am Denise Laframboise. I'm your host. To check out more episodes, you can find this podcast on my website, www.deniselaframboise.ca, or wherever you find your podcasts, so Spotify, Apple, or wherever else you find them. Awesome. Thank you.